This is the briefing for Friday, August 9th. Sometimes I feel like the markets test my patience, and I'm sure they do that to a lot of other people as well. For basically the last week, this whole past week, I've been talking about a counter trend rotation and the development of that in terms of price development and to some degree the internals. This is a 60-minute chart of the spiders, the Qs, and the IWM representing the Russell. Now, I've really studied counter trend rotations pretty in depth and have a paper or a book coming out on them that's going to express it in more detail. But a lot of times, counter trend rotations will develop into three legs. And I've covered this many times on this briefing. And you can see from Monday's trading, you can see the three-step counter trend rotation. And when I analyzed this, and you can go back and listen to the briefings, I talked about the fact that either one of three things was going to happen. Either a bottom was in and we were going to go all the way back up and test the highs, or, which I said was a lower probability, or this was a three-step counter trend rotation and that it would be complete. And that the third was that this is developing into something more complex, where this is a leg one, this is leg two, and leg three. Now, the yellow trend lines I put up are major or important short and intermediate term key reference areas, support and or resistance areas. The red lines are where there is equality between legs 1 and 3. Now you can see here, this was the first step that we saw, and it projected to coming up right around the 528 area, and that's exactly where the spiders came to when this sell-off began on Wednesday. Now, when this sell-off started, it was important, and I discussed this in the briefing, that if this low was not taken out, then that would suggest the higher probability that this was becoming something more complex in terms of a counter trend rotation, meaning this is leg 1, this is leg 2, and leg 3. So it was pretty clear that on Thursday that this low was not taken out, nor was it done in the Qs, nor was it done in the Russell. So that opened up the possibility then that we were going to see another leg up that potentially would equal this leg. Now, when I talk about equality, equality happens I would say a greater degree of the time when you have a counter trend rotation like this, but it doesn't always have to happen. It can stop earlier, it can go a little bit farther. The key is watching what happens when and if the main trend re-exerts itself and what's happening with the internals all during this counter trend move. Now, it's easy to see here that the Russell did not made it close to this, where this leg was equal to this leg, but you can see this second leg did not take out this low, and it appears that it's going to fail because the Russell, the IWM, would project up to about 213, and it looks like it's barely going to even make it above this high here, where this area of 209 would be equality between this leg and this leg. So where we are now is that I've put these other red lines up that would suggest where projection is for equality between legs 1 and 3. So if this is 1, this is 2, 3 would come in at the 539 area for the spiders. It would come in at 460 for the Qs, and it would come in at the 213 area for the Russell. Now, as I said just a second ago, it appears that the spiders may attempt and may even reach this 539, 540 area. It looks like the Qs are going to potentially not make it to the 460 area, and the Russell certainly doesn't look like it's going to make it to the 413 area. Important to this, and what we're looking at right now, is the fact that volume is falling off. So if this is the bottom, this rally should be attracting more buyers. People or traders should be piling in because this is a tremendous buy if value is going to be higher. So it's not attracting more buyers. In fact, more and more buyers are leaving the market, and you can see even going into today's high, we had a higher high today and volume was just extremely low on the spiders. Same thing with the Qs. You can see the trend in volume is down, the trend in volume is down on the IWM. And now there's a divergence in market breadth. So you can see here that breadth was weaker than what it was in the previous couple days. Same thing with the Qs or the NASDAQ, same thing with the Russell. So basically for Monday, at least from my perspective, the idea that this is still involved in a counter trend rotation is still the greater probability. That can change, and what would change that opinion or that analysis would be if we were to see these levels being taken out, but most importantly to see volume beginning to increase. That would tell us that traders and buyers are beginning to buy into the long side of this market once again. This was a really a tremendous, it did a lot of hurt to the indices. This was a very impulsive move. So it may be that traders are a little bit skeptic of stepping back in right now, but if they do begin to step in, then you'll see price begin to expand once again, and you'll see volume begin to increase. That would suggest then that this counter trend rotation is over. This was a three-step move, and this is the beginning of another move back to the upside. If volume does not increase on any move higher, and we do see a test of these areas, that's going to suggest that this is complete, and we're going to see another move to the downside. Now, key to that move is going to be taking out these leg twos. This move here, this low here would need to be taken out, which would increase the probability that this low is going to get taken out. And if that happens, then this low will get taken out, and we're likely to see another impulsive move to the downside as this market corrects in a longer term perspective. Same thing with the Qs. Watch this low right around the 434 area. Next low is going to come in right around the 432, and then of course this low comes in right around the 423 area. Russell is lagging. The Russell had some pretty good gaps in it last week and this week, but it is really lagging, and volume is absolutely collapsed in terms of the Russell. So while I am watching these areas for equality between legs 1 and 3, I am a little skeptical as to whether the Qs and or the Russell will make it up that high, so we could see some type of reversal much earlier. Now, looking at where we are from a little bit longer term perspective, you can see here that you can see this run, pause. So far it's a pause. Look what's happening with volume. You can see volume on the move to the downside, how it was increasing. Look what's happening with volume now. 52-week highs minus 52-week lows is negative, and you can see the divergence in breadth. The breadth beginning to weaken, and weaken pretty dramatically now as well. Same thing with the Qs. Absolute collapse in volume. Breadth, it was negative in today's trading, even though it made a slight new high. And then, of course, the Russell. Didn't have a high over the previous day's high, but volume is absolutely collapsing, and you can see the really big move. This is important. This 210 area in the Russell is extremely important, mainly because we're back in an area of rotation that goes back quite some time. In fact, on my screen only it goes back to let's see, January of this year, and I think it extends even farther than that. So watch what happens very carefully if we see any move to the downside in the coming days, and watch these lows, and you can monitor them very carefully. Place some alerts, because if they are traded through, that's going to signal the potential for additional downside. Looking where we are in terms of overbought and oversold, we're basically neutral. So this really gives the indices the opportunity to trade higher and or lower. And in terms of volume, this is total volume on the NYSE. You can see it is collapsing. Same thing with the NASDAQ, volume down as well. Looking at where we are in terms of 52-week highs minus 52-week lows. I'm sorry, not 52-week highs, but this is the percentage of stocks above the 50-day moving average and the percentage of stocks above the 200-day moving average in the S&P 500. So you can see that we've had a little bit of damage done here, a little bit of a bounce today in the S&P 500 above the 50-day moving average, but 200-day moving average is still lagging. This is the NASDAQ percentage above 50-day moving average. You can see we're below that now, and then below the 200-day moving average is pretty weak as well. And the same thing with the Russell, approaching this trend line, but you can see the damage that has been done this week in terms of both above the 50 and the 200-day moving averages. So it's going to be an interesting week next week. I know there's a lot of other people predicting a lot of different things and a lot of bullish sentiment out there in terms of advisors. But from my perspective, I look at this from the perspective that I want to see what the market is doing. I want the market to tell me where it's going. And while I have to try to anticipate some of the signals the market gives me, I want to know for sure. So I'm cautious to the long side of this market, mainly because of volume. And if this market does begin to turn and volume turns up, then it's going to be a pretty clear signal we could begin to see some very impulsive moves back to the downside once again. Remember, the market climbs a wall of worry, but when the bears come out, they come out all at once, and that's why we get these huge moves like this all at once. Have a great weekend, and I will pick this back up for subscribers on Monday.